Hey everyone, welcome back to Mitchell Markets. Today we're going to be going over a very important yet pretty simple topic, as well as just taking a look at the chart and what our plan is for this week. So far it's been pretty simple, and we're going to go over the strategy for this week that has been working very well in this reconsolidation zone between last Friday's high and last Friday's low. This is a very neutral week. I'm not specifically looking for bull or bear trading, shorting, or going long. I am just looking at the price action and what the market is throwing our way. So in the trading group, there is a few issues when it came to finding a specific thing this morning for trading futures. And I'm going to be going over one small correction that really needs to be made when you're looking at the price actions or you're wanting to trade futures in general. So what is the difference from this chart versus this chart? It's pretty self-explanatory, and I could definitely understand where people would be confused, and people were confused today when I was talking about my trading setups. So this chart is regular trading hours. This is outside regular trading hours. So for futures, this is going to be including everything. So you are going to be seeing smooth price transitions. Whereas here on regular trading hours, we are only going to be seeing the trading times for the New York Stock Exchange. So we are going to be going over these gaps that have been filled multiple times now. And this is how I've been playing my week. But there's people missing this then that were very confused when we were trading today. So I'm making this video about a simple topic, but can also be kind of misleading or confusing. As for futures, most people are trading on the 24-hour market, seeing this smooth transition, and typically I'm trading on the 24-hour market, and I will mark the keys that I'm looking for. For example, I don't have much up currently, but I have last Friday's high, Friday's low, Fibonacci levels in between. 0.5 is kind of the reconsolidation zone. And some of the marks that I had taken off were added from RTH. You can see these massive fill gaps here. So this was a fill gap. This was a fill gap. Both of these are filled. These have already been filled. I have traded based off these already throughout the week. But now take a look. What was not filled until today? Bingo. These market orders were not filled until today. So what we were doing, what the game plan was for today, we were shorting after the breakdown of the 786, as I was planning for it to fall back into this gap up this morning. And then you guessed it, hopefully, we were going long when it showed support on this 0.5, holding above, filling all of this liquidity here. And this was taking out stop losses of people who had went long earlier in this range. So we had a stop run, money pushing price below a key level to grab liquidity before reversing. And you can see this strong green candle upwards is showing a bear trap, and it was a false breakdown and a sweep reversal. So this was just a quick example on why you have to include data from regular trading hours as well as trading hours in different countries. Instead of just looking at the 24 hours, you would have missed all of this price action and confluences in the market. And one of the biggest ones being these gap fills here. So that's just a quick update, guys, on where we are this week in the market, what trades we've been taking, and what we're looking for. Today I had only taken this short into the fill and I did not go long just because, well, one, I had some things to do, but also it took a little bit of time after filling this gap to get some liquidity here. So anyways, make sure you're looking at all confluences and not just the 24-hour chart, as you're going to be missing a lot of details in the market. And make sure to mark up your chart, guys. At the beginning of the week, the end of the week, mark out support, resistance levels, and so on and so forth. Anyways, see you next time in Mitchell Markets. Have a few more videos coming your way.